Good afternoon, traders. It is Tuesday, January 13th, 2015, and the U.S. stock market is closed. You just have to look at this thing here, which is, let me get this thing out of the way, which is today's action right here, and know that we had a pretty wild day. In fact, I calculated the range of today was 425 points. Now, I think that is definitely the largest range for the Dow for this year. In fact, it's the largest range of the Dow for many, many weeks, even going back into 2014. So, the Dow ended up closing negative 27, but you can see that obviously doesn't have the story. We opened up here and had this huge move right at the beginning. It got up to over 250 points positive, and then it sunk to over negative 100 points here, and then finally ended up rallying just a little and closing negative 27. Unfortunately, this is not a great pattern for us. It's partially a good pattern in the sense that using our exit parameters, we would be getting out right here. And the result of that, we actually went from having negative open trade equity yesterday on the close to getting out with at least $2,000 in closed out profitable trades today. That's the good part. The bad part is that we start buying up here. Right here at the top is where we start buying, and then you can predict what happened here. The best thing I can say is we only got into 11 positions with a move that went to positive over 250 positive on the Dow. I actually wouldn't have been surprised if we'd gotten into 20 to 25 positions. We only got into 11, fortunately. But still, with this huge sell-off after we got in, we're holding negative $10,000 in open trade equity going into tomorrow. That's not good, folks. I'm not happy about that. But as I say, I can look at this chart and say, well, it could have been worse. You know, we trade a mechanical system. We got to do what the mechanical system is doing. But what's frustrating to me is I can look at this chart and I can tell, hey, this was not where we wanted to buy. You know, in spite of the fact that's our system, that is not where we wanted to buy. I don't even have to look at this stuff afterwards. I know when you start buying stocks, when the Dow is up over 250 points, it doesn't have a whole lot further to go. And most likely it's going to come back down. And particularly since we're up here at Bob's red line again, this is a resistance area. It's been a resistance area all along, and it was a resistance area again today. It couldn't get through it, at least not by a few points, and then it pulls back. So this, you know, from that analysis alone, this is not where we wanted to buy. That was where we bought today, and we really, you know, got socked. But you know, we do it. Now, what's going to happen down here? I'm trying to look at this and say, you know, the ideal situation for us tomorrow would be that tomorrow it repeats this pattern. We get the big shot up again, and then it backs off, you know, after 45 minutes to an hour. That allows us to get out of all these things, and we would probably at least break even on what we have if it did that. But unfortunately, the way markets go, they usually don't repeat the same pattern back-to-back days. What they'll do is do the opposite. the next day, and of course that would take us down, and that's going to really hurt us, because then we're going to be getting out down here, even though I like to see the Dow go down, not with 11 positions. But regardless what I want or what I don't want, the market is going to do what it's going to do. This is a tough day. The only positive thing I can say about this is clearly big time volatility, and generally speaking, we do well with volatility. We're going to make more money in volatile markets than in quiet markets. So I'm glad the market isn't quiet. I'm glad to see volatility do come into here, and we will make money with this volatility eventually. I'll show you a couple trades we had today just to talk about a couple things here. This is not a good trade for us. This is an IMMR Immersion Corporation, but it illustrates what was happening with those 11 with the 11 positions that we get into today. We got into Immersion on this big push up at the beginning of the day. It even went quite a bit profitable here. I'm sure we were probably up pretty close to $1,000 up here at the top. But then this is mirroring the Dow, and it starts selling off, and we end up negative $1,000 on IMMR. And you multiply that times 11 and you understand why we're holding negative $10,000 going into tomorrow. So this is the problem we had right here. This illustrates this one stock. We did have one good trade that we closed out, and that was in Lululemon Athletica. And we had bought this yesterday, and then we got a gap up today, and we get out of here right when that Dow was hitting its high for the day, up over 250 points. We get out, and we took like $2,600 out of Lululemon, and you can see that Lulu didn't sell off the way Immersion Corporation did, but it still came back quite a bit, and obviously our exit point was perfect. The problem today was it wasn't with our exits, it was with our entries. Anyway, that's the way it goes. We're still ahead for the month. We're doing pretty well, but today, and we're not out of what I'm really crying about isn't our closed out trades. We made money in our closed out trades. What I'm crying about is our open trade equity, and we're not going to know exactly how that plays out until tomorrow. So this is Trader Bob signing off. I will see you tomorrow. We'll see how it plays out tomorrow on Wednesday.